Our second point, be defensive in fixed income. Again, all of this monetary supply, all this funds being pushed into the system does have a negative impact in terms of our ability to take risk in the fixed income market. The Federal Reserve in this case has ramped up their treasury holdings significantly, as well as other countries, Japan and China. There's no question that the United States has an extraordinary amount of debt, and the result of that is very, very low interest rates. When those interest rates go back up, we're going to have to be ready to handle that in terms of the United States. And this next chart shows the move in credit. So we have the Barclays Investment Grade Credit Yield Index, which you can see has come down tremendously, and inflation expectations are starting to break up. So inflation usually drives yields higher, but we're continuing to see yields go down here. So we have this anomaly, which is not the norm, and we think that sets up we do think inflation is going to be an issue, maybe not immediately, but it's going to be building. Inflation's definition, too much money chasing too few goods. So we just heard the consumer hasn't been spending, inventories are low, goods are low, too few goods. Money supply's exploded. This is the definition of inflation. And so we think interest rates go up, and so therefore what we're going to say is we need to keep our bond durations or the length of the bond down and keep our credit yield high. There will be a time to take more risk in fixing them. There will be a time to buy longer bonds, just not today. Just not today. As we see on the next, the credit risk, you want to get paid for credit risk. If I'm going to buy a junk bond or a high yield bond, I want a big premium over Treasury. And right now, we're just not seeing that big premium. And so while we don't think there's a risk in the credit market, we're just not getting paid to take risk. And so once again, we'll go to the conservative with regard to that. We do like, interestingly, emerging market. Some very interesting returns there. They actually look pretty reasonable. We have money in there in that segment of the market, and we think that's one place to try to get yield.